Every single day, the market just throws this tidal wave of information at us, right? You've got headlines, crazy price swings, talking heads on TV. It is pure noise. So the biggest challenge for any of us is, how do you cut through all of that chaos to find a clear path forward?
Well, the answer isn't some secret algorithm or a crystal ball. It's actually about changing the question you're asking in the first place. See, instead of chasing these fleeting trends, professionals build and hold a strong, well-researched investment thesis. They're not trying to guess the stock's price tomorrow. They're trying to figure out if a company's future is bright or not so bright.
And this whole approach, it's really built on 3 core pillars. First, you've got patience, which is all about letting those big long-term ideas actually play out. Then there's momentum, which is about finding that perfect why now moment. And finally, stability, which is what helps you weather any storm the market throws at you. So let's break down exactly how this works.
All right, first up, patience. This is all about learning to tune out the daily noise so you can focus on a massive multi-year trend. And honestly, there's no better example of this in action right now than the structural bet on copper.
So what's really interesting here is that this number, this is the noise. This is the 1-month performance of a copper miners ETF called COPX, just a small dip. Now, if this was the only thing you saw, you might get a little nervous, right? Or maybe you just think, boring.
But then you see this. That exact same asset makes up a whopping 12% of this portfolio. That is not a small bet, my friends. That is a statement of incredibly high conviction. And this slide just perfectly shows the core idea. You put your capital behind your thesis, not your reaction to a little bit of volatility.
And this quote right here, this gets right to the why. The whole thesis for copper isn't about what the price is going to be next month. It's about a fundamental structural imbalance. It's all about value in an asset based on a really simple, powerful idea. The world is going to need a lot more copper than it can possibly produce for years to come.
And look, this isn't just a guess. It's a structural reality. You've got the global push for EVs, the entire green energy transition. You got the fact that existing copper mines are running out, and it takes over a decade to bring a new one online. It all points to the same exact conclusion. Demand is structurally baked in for years. That is why the thesis requires patience. And that is what gives you the conviction to look right past a tiny 1.79% monthly dip.
Okay, so let's move to the second pillar and see how this all builds: momentum. Now, this isn't market timing in the way most people think about it. A great long-term story is one thing, but a professional investor, they also need a compelling why now. What is the specific event, the catalyst, that's going to unlock an asset's value?
And that distinction is absolutely crucial. We're not trying to time the entire market. No way. We're timing our investment around a company-specific event. You identify the catalyst, you have a pretty good idea of when it's coming, and you position yourself to benefit when the rest of the market finally wakes up and catches on.
And here is a perfect case study. The asset, the video game giant Take-Two Interactive. The catalyst? Oh, just one of the most anticipated entertainment releases in history, Grand Theft Auto 6. This is a single, massive event that is expected to generate an absolute tsunami of cash flow for this company.
And just like we saw with the copper bet, the conviction here is just undeniable. A 17% position. This isn't just a passive holding. This is an active, high-conviction bet that this single, known catalyst on the horizon is poised to drive massive, massive returns.
So now we've got our 2 main pillars, right? A long-term structural bet and a catalyst-driven special situation. But these aren't just 2 separate ideas floating around. They're actually designed to work together, to complement each other, to build a portfolio that's both ambitious and, really importantly, resilient.
And when you lay it all out like this, the logic just becomes crystal clear. You've got the patience pillar, in this case copper, driving that long-term structural growth. Then you have the momentum pillar with Take-Two, targeting a huge specific catalyst. And underpinning the whole thing is stability, bonds and cash, acting as a defensive anchor and giving you that dry powder to seize new opportunities.
But here it is, the final and maybe the most crucial hurdle. You can have the best thesis in the world, a perfectly structured portfolio, and it can all fall apart because of one thing: your own psychology. A great thesis is frankly worthless without the discipline and emotional control to actually see it through.
Let's be real, this happens. Imagine that 17% position in Take-Two gets chopped in half before the GTA 6 launch. For most people, the first reaction is just pure panic. You get that knot in your stomach, an overwhelming urge to just hit sell and make the pain stop.
But the professional investor, they have trained themselves to reframe that situation instantly. They ignore the price swing and they ask one simple question. Has the fundamental thesis changed? Is Grand Theft Auto 6 still coming out? Is the structural demand for copper still there? If the answer is still yes, if the story is still intact, then a drop in price isn't a signal to sell. It might actually be an opportunity.
And this brings us to such a critical point. The antidote to fear isn't just being brave, it's information. See, conviction isn't some gut feeling you have. It's the direct result of the hours and hours you spent researching, understanding the business, and building your thesis brick by brick. That hard work, that is your only true edge.
And that really brings us to the core takeaway of this entire playbook. A truly professional portfolio isn't just a list of tickers on a screen. No, it's a collection of well-researched, deeply understood stories. Every single position has a purpose, a role to play, and a thesis that you can articulate and defend, especially when things get tough.
So, I'll just leave you with this thought. When you look at your own portfolio, try not to just see tickers and percentages. Try to see the stories behind them. And then ask yourself, what's the most compelling story, the most powerful thesis that you are willing to bet on with real conviction?